Hi everyone. So the stock which I'm going to discuss today is from the sector which is going through a tough times right now. So no guesses, it's NBFCs. So from there I've chosen a stock, LIC Housing Finance. So in an environment where we see that there's always an opportunity to buy a stock where the entire sector is going through a mess. So LIC Housing, the stock which has been undervalued for quite some time and had been sufferer for quite some time, where a lot of newer NBFCs took the growth for quite some time. So we believe that LIC Housing Finance could be a good opportunity for investments in a current scenario where the liquidity is tight and where your cost of funding is going to go high, and the NBFCs which were able to borrow money at a lower cost and able to sustain in such time and able to maintain his asset liability will be the winner in this, and also will be differentiated between the men's and the boys. So my sense is LIC Housing Finance could be a good investment opportunity. The stock trades at dirt cheap valuations at decade low valuation of 1.3 book for forward FY20 with an EPS of 55, which they'll deliver good return ratios, ROE at 17% plus and ROA at 1.7%. So we believe that LIC Housing, with a strong parentage of LIC with 40% stakeholder in the company and a strong credit rating, will help them to garner money at a lower cost. And secondly, the most important fact to understand about it, last few years, the biggest issue with the LIC used to be that a lot of balance transfer from the existing holder used to go to some other newer NBFCs. But due to such scenario and like this, I think that will stop. Secondly, there will be one of the guys where in going forward, we'll see housing loan will be able to equal to match with the banks. So this is one of the NBFC which will be able to manage that kind of stuff. Second, most importantly, if you look at it, the LAP portfolio is going to deteriorate. So I think it's a good investment argument where you have a good housing loan portfolio, HFCs and plus the LAP portfolio going to reduce going forward. Interestingly, also if we monitor that the credit rating since 2002 has been AAA. So I think going forward, this would be a beneficiary for them. So again, summarizing into all the three biggest investment argument: one, decade low valuations which is trading at, that could be a significant upside from the current levels. Second, sweet spot as of now where entire industry is going to a mess, where there will be a clear winner, where they have a good parentage and good liquidity system which well managed. And interestingly, the banks and mutual funds where will be willing, which are getting slower for the newer NBFCs. I think they'll benefit in a huge way, and there the cost of funding still will go high. So here LIC Housing will able to garner funds from mutual funds as well as the banks. So their cost of funding will still remain low. So our sense is that the stock available at 1.3 book FY20 with 55 rupees earning, which will do and a decent growth at a good return ratio, as I mentioned, could be a good investment argument from here. So we believe that it could be a 28% upside from the current levels. That's it. Thank you.